The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. This is Larry Pesavento for TFNN. If you have any questions, it's 877-927-6648. And the first chart that I put in today was the chart for Apple, because we're reaching up to make a butterfly pattern top at the 677 level. Once we broke above that 625, it had a really strong indication that we were getting ready to go higher. I think the key to this pattern is at the point C where we have support zone. You'll notice that the market gapped up after that spot, and once that was the 786 of the previous swing, and then once it gapped above that, that was several weeks ago, that gave this target that we're looking at. It did stall a little bit up at the 786 at the 625 level, but once we went above 627, 629. That told us that we were most probably going to go up and make the next target at 677. And 677 is just the 127. It might go all the way to the 1.618. This market has been a very, very powerful stock all along. It's got a great following. They've been right forever. And, so there's no reason other than the butterfly pattern for it to stop at the, 677 level. But, the news is coming in that they've got a new iPhone. And that's probably, the impetus to get people to buy it. But, it's just another pattern. It's just probabilities. Now, the thing that I would like to cover on the show today is the divergences that I see happening in the market. The main one that has my interest is the volatility index, the VIX index. And the reason for that is this is a textbook of technical analysis, folks. If you want to look at the VIX index that I put into Tiger TV, you have a huge double bottom that is formed. The double bottom is perfectly symmetrical. In other words, from the low in March to the high that we had in June, is exactly equal to the high in June to where we are now on August the 19th, 20th. So, we also have a 3 drive to a bottom pattern that is formed. We have an AB equals CD double bottom, as we just discussed. And then we also have a butterfly pattern that is also formed. So it has just about every conceivable pattern that you could have in technical analysis to tell us that, this is the spot where the the market should, turn and, start to go down. Now, whether it will or not, we'll have to wait and see. We have a 786 retracement has also been completed in the New York Stock Exchange Index. That index has also made a head and shoulders pattern, and we have a good indication that we're probably getting ready to have some type of a pretty good correction just based on the time symmetry that we have in the head and shoulders pattern. And if you get a chance, you'll see that and get into Tiger TV, you'll see that the high that we made last October to the high we made in March is exactly equal to the high we made in March to where we are right now. And that completes a symmetrical, head and shoulders pattern. It's also occurring exactly at the 786 of the March high. And the New York Stock Exchange Index is the best index for gauging where stocks are, because it's 2,000 stocks. They're all cap weighted. They're adjusted for dividends and splits. And so there's no, you don't have to worry like when you look at the Dow Jones, it's 30 stocks unweighted. And then you have the NASDAQ that is 100 stocks that are, very heavily cap weighted. And then also the S&P 500 that are cap weighted. So but there's only 500 with the S&P. So NYSE is really the best one to look at. The problem is that the New York Stock Exchange Index dropped the ball back in the early 80s when they really had the leg up on the Dow Jones and also the NASDAQ, contracts for futures. All they were doing was competing with the S&P 500, but the folks at the Merck under the leadership of Leo Malamed, were very good at marketing it, and it became the, the number one futures for looking at stocks and stock indices. And from that came all the ETFs and all the other things that are happening. Now, remember when Tom Pelk did his work on the full moons and new moons going back to 1928, he said that you want to be a buyer of the new moon and seller of the full moon. But if you went and looked at the study during the years where we had bear markets, which there's been about 4 or 5 of them, since that time, if you would sell on the new moon and buy on the full moon, it's far more profitable. And if you remember, on August the 2nd, we had a full moon, and the market was bottoming that day. That was a Thursday. We came down Monday, Tuesday, Wednesday, Thursday into a 61% retracement, and then we exploded to the upside, and we've been up every day since. 12 straight days in the S&P. We've either made a higher high or closed higher. And if you want to do a little research on your own to prove how some of these things work, go back and try to find a period where you've had 12 days or more where the market has gone in one direction without making a lower low or higher high during that time. That makes it an outlier event. In other words, it's way outside the boundaries of what we usually have. And those are usually occurring, at major tops and bottoms. So we have a P-index date that was on yesterday, the 19th. And and we also have the new moon on the 17th, and so my assumption is that we're very, very close to a point. Remember, I thought we were very, very close to a point on the 3rd and the 10th of August also. But the market is not really based on the New York Stock Exchange Index. It's gone virtually nowhere. The NASDAQ has made a double top. The Dow Jones Industrial has made a double top. The utilities is lagging incredibly badly. It's been down about 8 or 9 days in a row, and it's down again today. Part of that is a function of interest rates because the bonds have bottomed and made it the points that they're able to have a little bit of a relief rally here on Treasury bonds. But once we go below 145 in Treasury bonds, they're going to turn the lights out over at that bond pit, folks, in my opinion, because that means that rates are really, and if they start to accelerate, in other words, if we get a really bad day in bonds, like down 2 or 3 points, they're going to trap a whole lot of people if they haven't already, and then you're going to see the proverbial stuff hit the fan, and then you'll start to see some real volatility in these markets. And that's one of the reasons why I like the VIX index as the best trade this week, is the fact that everybody's on one side of this market, even though the volume is small, and if the turn does come, it could be very, very substantial. So that's what that's what we're looking at, and we have some interesting things happen in the commodity side of the market. What everybody that follows the precious metals is talking about today, of course, is the silver market, because the silver market has come out of the trading range that we've been in for quite some time, and we are looking at we've had higher bottoms in silver for at least 2 months now. And we've been talking about that quite a bit and, mentioning it. And, of course, we've been very friendly to the gold stocks and also to gold. And silver is now breaking out substantially to the upside. It's up about 26 cents above the old breakout point at 28.37. So that's beginning to look really interesting. Now, the real key, folks, is going to be tonight when they bring all of the statistics in, and they're going to check to see if we have an open interest increase and if we have a volume increase. Now, if we have an open interest increase and a volume increase, that means that new players are coming into the market. In other words, it's not just short covering. See, now if you come in tomorrow and you look at the open interest and you see that the open interest has dropped and prices went up, that just means short covering. That's not a good thing. But if the open interest increases, even if it's just 2 or 3%, ideally you'd like to see 5%, and if you're really bullish, you'd like to see something like a 10% increase. Then you know that you could be off to the races, and this old resistance at 28.30 to 28.40 will be support on the next pullback. Gold is also continuing to move higher. We've been really bullish on that, and we need gold to close above that 1635 level, and then we've done the same thing in gold on the breakout. Now the silver has had a really good distribution level here, or accumulation I would call it, because the market's going up to the upside. Good accumulation since late June. So we've gone 2 months where the market's been in a trading range between 28 and 26.40. If you went back and looked at the low we made back in 08 when we were around $13 to $14 an ounce, we did the same thing. You know, silver bounced around for about within a dollar range for well over a month before it finally turned. So we could be coming in at a really high level consolidation in silver, because we do have that triple bottom. And actually, it's a perfect symmetrical triple bottom from the low in September to the high in early March to the low in July. If you measure the number of days up, they're perfect on the way up and perfect on the way down. That's where we bottomed in July. We were talking about that triple bottom at the time, and now we've made higher bottoms all along here for the last, several months, and it looks like it's finally, turning its head to the upside, as is gold. So these are the things that we're watching. Now, the one market, since we're talking, about the metal markets, the one market that we should talk about also is the copper market, because we're looking at the copper market, and usually copper and gold and silver go together. But the highest correlation in copper comes with the stock market. And if you'll take a look at the chart that I put into Tiger TV, you'll see the copper futures, the chart of that's just completed a bullish Gartley down there at the 329 per pound level, and we're trading at about 338 right now. But it's had lower highs ever since the last several weeks, and in the last several months it goes way back into July and June, when we had these, higher, actually in April. It's been down since, since February. Since February, we've had nothing but lower highs in the copper market, whereas the stock market has been going higher. Now, that's a tremendous divergence. If you look at that, you'll see that just doesn't happen very often. That one of two things is wrong. Either the copper market is wrong and it's going to have to catch up to stocks, or the stock market is wrong and it's going to catch up with copper, because the correlation here is better than 90%, is, in other words, in the direction. When copper goes up, stocks goes up, and when copper goes down, stocks go down. This has not happened over the last, 7 or 8 weeks, and so there's a big divergence here, and with this low volume that we're having in the stock market, I'm a little suspect of being bullish here, and that's why I've been, talking about these divergences that I've been seeing. And, of course, we've looked at the one in the transportation index. We've looked at the one in the utility index, which has, been very, very bearish. And, it's down, sharply today, also. And it completed a 3-drive pattern in the utility index. And, it's very oversold now. And, it's ready to even have a little bit of a bounce. Now, part of the reason for the utilities being down, or the fact that the bonds have come down, and the utilities are related to interest rates, because people are trying to find places to place money that are relatively safe where they get a good return. You don't get a good return when you're buying a 10-year note at 1.75%, folks. That's not a good return. Okay, we got to take a little break. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks. 877-927-6648. And we were talking about some of the divergences that we're seeing in the market. I've also put in the transportation, and you'll see that we've got a down-sloping pennant where we've had lower tops for quite some time. So we have double divergence between the transportations, utilities. We have one stock, the mother of all stocks, of course, which is Apple. Basically makes the NASDAQ move quite a bit. So, if you're going to trade the NASDAQ, you got to realize that, 25% of it is the price of Apple itself. So that's not a fair index compared to everything else. That's why the NYSE is a much better index, followed by the S&P, and the Dow is the worst because it's not cap weighted and it's only 30 stocks, but it's the one that gets all of the publicity. The problem was the Dow Jones family. The people that own Dow Jones Company would not allow it to be used as a future until they realized that the S&P was taking over everything back in the early 80s. That was 82, 83, and then they finally was approved the Board of Trade to use it as a futures, and it's never came up to anywhere near what the S&P does as far, as volume or liquidity. So that's important. Now, we do have in the cash market, we have a cash S&P market. We have made a new high from that April high. We're only at the 786 in the New York Stock Exchange Index at this point. The NASDAQ has also touched that high. The Dow Jones has not quite touched it, but very, very close. They're all making, large AB equals CD patterns, very similar to what we were doing in April. And if you folks remember, I took about a 1 week or two. I think I took 2 weeks off in April, because I wanted to be prepared for the down move, coming. And, that worked out pretty good. The market came down into June, and now we're coming up. And I'm going to be taking another break from TFNN. This is my last week for a while. And so we'll be watching the market. I'll still be doing the newsletter, but as far as doing the daily shows on Monday, Wednesday, and Thursday, I will not be doing those during these next time period that we're going to be in here for a few weeks at least. Anyway, this is what we're looking at. We have the full moon that occurred on the 2nd of August. That was an exact 618 retracement, coming off of the last full moon before that one. And now we're coming into the new moon that has already occurred on August 17th. So all the cycles are finished. We've had a P-index date yesterday, which was August the 19th, which also happens to be the birth date of William Jefferson Clinton, who ranks with Lyndon Johnson, I think, as the in presidential categories. Okay, now we will be talking about some commodities here because we have a situation in the commodity markets that, if you ever listen to the commodity show, we've been watching, the price of crude oil and also the price of gasoline, for quite some time. And we are completing Gartley patterns. We're right up here in the ballpark right now at this 96 level in the crude oil, where we've been waiting for a very, very long time to get ready to go short here, because we had the butterfly pattern way back in June, and we've had a nice $18 rally in crude oil. We're still in a downtrend, and so crude oil is actually completing the Gartley right at this level right now. So keep an eye on the oil stocks that you look at, because there's probably some of those will probably be making some serious problems. As a matter of fact, what we'll do is we'll take a look at ExxonMobil after we take a break here, and we will get an idea if that is in fact completing a bearish pattern like we're seeing in the crude oil, and then also in the gasoline. The gasoline futures have also completed the major ABC Gartley pattern that we've been looking at. That completed on last Friday, actually last Thursday, and we've been down several days since then. But we're right at the level where it's at the point where it's getting ready to go down. We're right at the money at 308, and we're really looking at a potential here for the market to move down in gasoline and also crude oil. Now, if they're wrong, the crude oil is going to explode above $98 a barrel, and gasoline is going to get above $3.18 per gallon. So these are the parameters that we're looking at, and so it's important to take an amicable risk here is very apropos, in my opinion, for both gasoline or crude oil, but you shouldn't trade them both. You should either pick one or the other. Okay, we're going to take a little break here. When we get back, we're going to take a look at ExxonMobil and maybe one other oil stock to see if they're also telling us that we're near point. 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, folks, we were talking about the oil market, which is also, the gasoline market. And also I brought up the chart for ExxonMobil. It's one of the most widely held stocks in the world. It's making a 786 retracement off the highs of 2007. And so if it follows a correlation of crude oil, very, very closely. And so I would not be long that stock up in this level. I mean, it's just at a point where it should be ready to turn south. That's what it looks like, if in fact the crude oil and gasoline are ready to turn south. Now, the next subject that I want to get into is the Treasury bond market, because we broke below the 147 level in the Treasury bond market. That level was the low that we made on the June 4th solar eclipse and full moon. And we made a 1.27 expansion of that. In other words, we went from June 4th, up into, early, late July, around the 28th, and then we came down and made a 1.27 expansion of that on Thursday. And now we're starting a little bit of a rally. Now, if we only get a 2 or 3 day rally and we go back below 145, we're going to start looking at a situation where the next support doesn't come into the around the 136 level. This is going to be a huge increase in interest rates, folks, and these people that are issuing debt are going to have to issue it at a higher price. I know that the people in Europe are saying they're going to put a cap on things. Those things don't work. The reason why is it's basically a free market, and if you try to put a cap on one bond, somebody else is going to come out and say, look, buy my bonds, I'm going to give you a higher interest rate, even though that's still funny money, but they'll go for the higher interest rate, just to be safe. This is a perfect example of what happened in Greece, and that's why it doesn't work. Debt is either going to be repudiated or repaid, and where there's so much debt out there, it's nearly impossible for it to be paid off. So that means it's going to be repudiated, and that's where the problem's going to lie. That happened in Germany, after World War I. When they had to take a whole bunch of Deutschmarks in, actually wheelbarrows full just to get a loaf of bread. So this was, what is related to Gresham's Law, where bad money drives out good. And that's why you always want to have a little bit of silver on hand and a little bit of gold. And I always recommend usually about 3 to 5% of your net worth should be in silver and gold. And silver, you should have some of the pre-64 silver coins that are 90% silver. That means that if you own a bag of those, it weighs about 54 pounds. You own about, I believe, 700 ounces of silver. Something like that. I don't remember exactly, but and then you could if you have to, people know what those are because they can see the coin that it was minted. It's like a little bullion bar. If you've ever traveled to places in the like North Africa and Morocco and areas like that, where you go into the malls there, where the markets are, they have people there that buy and sell silver. And the way these fellows determine, how much gold content it is, they take a little silver or a little gold hammer, and then they put the metal on a little tiny pedestal, and then they tap it, and it makes a certain ring. And you can do that with your coins themselves. If you tap a silver coin to a silver coin, it makes a different ring than if you tap a gold coin to another coin. And that's how they determine, what the percent silver is or percent gold in precious metals. And then they weigh it, and that's how they come up with the value. So anyway, this is what we're looking at. We'll get back to the bonds here. I'm looking for an ABCD retracement here. If we can get it up here to this, like around the 150 level, that's the real good place where I'd be looking to do that. That would be TBT's got to back off a little bit, before I think it's a really, really safe place to buy it. But the bonds would be looking at 150 as far as a place to look at. And there is one other possibility here, and that is the bonds could go up and make one more high up into this 156 level. That's not very far away. That's a 10-point move. That could be anything happening in Europe or China or someplace else. That's the main thing. Oh, by the way, there's some really interesting things that happened in China. There was the trial of the lady who was the wife of the chairman, who was she admitted to murder, and so she was sentenced to a suspended life sentence. Boys and girls, let me explain something to you. We all have a suspended life sentence. The greatest mass murderers in the world are the doctors, because once we're born, they slap us on our keister, and we start to cry. That is the blow that kills us all. Sometimes it takes a little bit longer than others to die, but that's the blow that kills us. So now she has a suspended life sentence, which means instead of being executed, she gets a life sentence, which will be commuted, from what I've heard, in about 3 years. So she'll be out in about 3 years. So we'll see what happens. At least the politics in China and the politics in the United States are getting more and more equal. Anyway, it was the chairman's, one of the big, Bo Lai, I think it was his name, Chairman Bo. He was like the number 2 or number 3 man to be the next chairman of China. It's in the news. I mean, you got to take a look at it. But it's she admitted to poisoning the reporter from London because she was thought he was threatening her son's life. So, but anyway, it's just all politics, and it's just one of those things that actually you don't want to talk about too much. It's all a bunch of baloney. Okay, let's get back to the commodity markets, because we've had some really interesting markets. In the currency markets, we had that big move in the Australian dollar that's still going down. It's a couple hundred points from where the pattern completed, and we had another pattern that completed on Friday that we talked about on Thursday, and that was where the Japanese yen had come up and made a 61% retracement of the high that we made back in June. It made a perfect retracement up there at that 79.60 level. We're now trading about 20 pips under that. And we've had higher bottoms in the Japanese yen ever since last October. So if we get another higher bottom here in the Japanese yen versus the U.S. dollar, that would come in at around the 78.54, about 80 pips from where we are now. You want to be looking to buy the U.S. dollar versus the Japanese yen. I believe this has the most potential of any currency that we're looking at, even more so than the U.S. dollar itself, and even more so than the euro. I think the dollar versus the yen is the one that could really be the big mover. You don't see it on the very often, and I'll see if I can get the really long-term chart on this. Yes, I can, and you'll be able to see where we used to be at 146. In the dollar. We're now trading at 79 in the dollar versus the yen. We completed a massive butterfly pattern down there at that 75 level. That's when Tom was really promoting King Dollar, and that was part of the reasons why the dollar began to to move pretty good. But this one, we could get a move in the currency to go all the way up to the 126 level. That's 50 points, folks. And 50 points in the euro would take the euro down to about 70. So I think it would be easier for the dollar yen to make the 117, 118, 120 level than it will be for the euro to go down to 70. But the euro can go to 70 because it's been to 70 twice before. The euro came out in 2000 at, I believe, 130. It went down to 65, rallied up to 164, came back down to 65 again, then rallied back up to 160. So, it could very easily make these large swings. So, but my bet, or what I think is the best, potential, is the dollar versus the yen. We were looking at it at 75, and then it had the huge move, that, paid off pretty good, and then we had the pullback right down to the 786, right at the 77 level, and then we had another move up, and now we're looking at another higher bottom, and that price objective is up around the 120 level, and we're only trading at about 80 right now. So that looks like a very interesting one, on the longer term price format. So. Okay, that's the Japanese yen. We need to take a look at the the Australian dollar, and unfortunately, I have lost it on my monitor here. Hold on one second here. One of the problems of having a large monitor is your eyes have to move very, very quickly, and that's not very good. Let's just switch over and talk about the gold market for a minute, because I know more people are interested in gold, than they are the Australian dollar, but gold will show, the really nice, higher bottoms that we've had here, all along, and we've been talking about these just about every week that we've been, on these radio shows. We've been talking about the higher bottoms that have been occurring, and we've just had our fifth higher bottom, last week, and I've got to do one. Boy, it's tough when you're trying to walk and chew gum at the same time. Give me a second here to put these in, and we will bring it up a little bit, and you'll see the fact that we've had 5 higher bottoms in the gold, and it's really acting really nicely. We need to get gold above that 1650 level. That would be the one that would really 1630 level would tell us that we're really off to the races. The good part is that the silver is breaking out, has already taken out the that old high at that 28.20 level. We're 40 cents above that. So with the 5 higher bottoms now that we've had in the gold market, that sets up anything above that 1630 level really starts to really look interesting. And as I mentioned before, if you want to do this yourself, go check the open interest tonight, folks. Do a little homework. Like Jim Twentyman always says, defy human nature. Do the work yourself. Go to the CME website. Just go to CME.com. Go to the metals and check on gold. It'll say gold GC, and then it'll give you the settlements and everything. And just go to where the open interest is, and it'll show you the open interest as of yesterday, and then it'll show you the open interest as of today, and also the comparative volume. And you'll be able to see if there was an increase in open interest in both gold and silver. And if you do that and you see an increase in open interest and you see an increase in volume, realize that this is a volume breakout. This means that the people that actually have money are putting their money, to the test, and they're saying, okay, we think it's going higher, and so they're putting the money into the pot, and the shorts are saying, okay, I'm standing aside. And, that's it. That's why the markets go up. Some people think it's going up. Some people think it's going down. And if more people are buying, prices are going up. Has nothing to do with the fundamentals. Has to do with the presence of the perception of where they think, the market is going. So that open interest is going to be, a very, very key thing, to watch not only today but also tomorrow, because if we start to get a little pullback and we start to see open interest increases, that buyers are coming into the market. Now, for every buyer, there's a seller, but if prices are going higher, that means the buyers are more powerful, and there's more of them. So they're willing to bid up prices. So that's the important thing of why we're watching the open interest, because remember, when silver and gold were making their tops, we were seeing decreases in open interest, and there was we were screaming at folks saying, look, this is a parabolic move up, open interest is decreasing, volume is decreasing, prices are going up, that's nothing more than short covering, and it's unsustainable. And that's what happened. I think this is what's occurring in the stock market with this, small volume that we're having. But so far, the market has not turned down. That's not a function of the market. That's just a function that I got the cycle wrong. I thought the top was going to come in, a couple of weeks ago. It hasn't gone up very much, but it still has not turned down. So that's the primary thing that you want to be watching. Now, someone asked a question about the stock that we were looking at in the gold mining sector, which was Newmont Mining. We had a 3 drive to a bottom pattern, back in May, and then we had the double bottom that occurred in August, and we were looking at that double bottom because usually when double bottoms occur, they take out the old bottom by just a little bit. That's because people put their stops at the old lows thinking that the market's going to come down and go down forever. But if you looked at that Newmont Mining chart closely on the daily chart, you'll see that when it made the new low, it was making it with an AB equals CD pattern. So it makes a new low with the ABCD pattern, taking out the low from May, and then that's when the market reversed from. And that's when you want to be buying when the market is the most bearish, because that's when your least risk is occurring. Now, if you turn this pattern around and put it up with the Dow Jones Industrial Average, that's what's happening to the Dow Jones Industrial Average. We're going back and we're making a double top in a big AB equals CD format, and it's a perfect ABCD. There's no question about it. So I think we're very, very close here. The thing that really puts the nail in the coffin for me as being bearish is the fact that the VIX index, which includes the psychology of the market, is at new lows, and we've had really great symmetry and all of those patterns coming together. The double bottom pattern, the butterfly pattern on the daily, the ABCD on the daily, and the 3 drive pattern that we have on the daily, and also the butterfly on the daily. So there's 5 patterns saying that this VIX is ready to rally. Okay, we've got to take a little break, and then we'll wind up my show. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and we'll be finishing up the show here. I thought we would enter the last chart will be the chart of the natural gas, because we've been watching that for quite some time. And I believe Nico from Costa Rica was talking to talking to Tom and Steve about this phenomenon of global warming and stuff like that. So we do have a lot of natural gas in the world. The main thing about this pattern that we looked at that completed last week is the fact that there's perfect symmetry on the way down between the May and June lows, and then also between where we are now and where we were in August. Those are perfect AB equals CD patterns that just completed, and as long as this natural gas holds above 260, it looks like it still should be be going a little bit higher. The last thing that I wanted to talk about, this is the last part of the show on Monday, is the divergences that I see happening. Whether they're correct or not, I'm not sure, but we have double tops in the NASDAQ, double tops in the Dow Jones Industrial Averages. We have major divergences between the transportation index and especially the utility index, which is signaling also higher interest rates. The VIX index has completed every conceivable pattern in technical analysis. It has a double bottom. It has a AB equals CD pattern on the daily. It has a butterfly on the daily. It has a 3 drive to a bottom pattern on the daily and a 3 drive to a bottom pattern on the longer term chart. So all of those are telling us, in fact, it's not just telling us, it's yelling and screaming at us that something is getting ready to happen to the VIX index. Remember, the VIX index is the volatility index. It's a measurement of fear and greed. And if you don't even watch the news at all, you just wait and see what happens. There's going to be something happen here in the next couple of weeks, whatever, to probably make this index rally. Why? I don't know. It's just that it's completed a whole lot of patterns. Now, the other thing is that this pattern could fail, and we could go below 12 or even 8 or 9 or 6 or maybe go to 0 in the VIX. Who knows? But this is what we're looking at right now, is a completion of a whole bunch of patterns. And frankly, they'll have to prove to me that all these patterns are going to fail, because if you see all of them coming together like that, I cannot find an instance where they all fail. I'm sure there are some, but I frankly don't know of any one particular. Now, I started the program with the chart of Apple. With the price objective of 677, we've been as high as 667, I believe, so within $10 of that. I believe we could very easily make it, even if the market does turn down, we could very easily make that price objective. So keep an eye on Apple at 677, because it's 23% of the NASDAQ's weight, and so that's affecting what's happening in the NASDAQ. So just remember that this is where we are. And a lot of divergences, low volume, and so just be really careful here with your 401ks and things like this. We also had a new moon, occurred on August the 17th, and then we had a P-index date occur on the 18th. Unfortunately, the Bradley model is not very much help here, because we did have a date on the 16th, and it has not really done very much from here, unless the Bradley's going to invert for a month, which means the market would be coming down anyway. We just can't use it. You have to start with the patterns, then you move to the ratios, and then you go with the timing things, which we use are the regular cycles that we watch, the nominal cycles, and then we watch the astral cycles occurring at that point. So these are the things that I'm looking at. So just be careful, and may God bless, and we'll see you on Wednesday.